Hi, everyone, and welcome back to the Refinitiv Perspectives Live special. My name is Trang, and I'm delighted to be your host for our next episode, which will have two parts to it. First, we'll look at the South Asia regional outlook for financial markets, followed by a deep dive into infrastructure as an asset class. And for the first part, to talk about South Asia, I'm really delighted to welcome Gautam Verma, country head for South Asia at Refinitiv. Welcome.
Thank you so much for having me.
Thanks, Gautam. And I guess the main question I really have is what your thoughts are on the economic and financial outlook for the South Asia region for 2021.
Sure, great question. As head of South Asia for Refinitiv, I just say India is strategic to our business, both from a growth perspective as well as our global operations hub. We continue to invest into this market. In fact, if you look at the number of employees, India actually has almost a quarter of our global employees based out of India. So that's a lot of investment as well as commitment from the organization. Let me break your question into three parts. First, I'd like to talk on the economic trends, the post-COVID impact, as well as what are the clients saying and what are the feedback that we hear from the ground from our customers. From an economic trend perspective, one, I'm glad we are behind. 2020 is behind us. Looking at 2021 now, certainly some positive signs already to the recovery, which we see. For example, if you look at GDP growth in South Asia, it's looking to rebound to 7.2% this year, and India on its own would be about 8%. This actually represents a massive bounce back from what we saw, with respect to 2020 and the contraction in the GDP numbers from last year. From a capital markets and debt markets perspective, whilst we've seen the M&A as a whole down, but what we have seen is some really key strategic M&A activity in the region, which is actually up 8%, when you compare that to last year. This is, in my view, another indicator of, strong recovery, which is underway. Also other reforms by, both the government and the regulators, to increase the, for example, debt in secondary market, and ease of doing business, etc. So there's a lot of reforms that we foresee from both the government and the regulator as well. The other positive impact that we see, or the trend I foresee, is the number of and the value of the IPOs up 45% since 2019 with 42 issuances. So which is again a positive sign in my view. Also, what we have seen is the equity capital market, is up 62% compared to last year. So that's actually quite significant. From an investment into infrastructure, that's another area that we see as a trend, and I'm sure Mike will talk to that a bit further on. In fact, our Infrastructure 360 app in Workspace, which we soft launched in our market this month, is tracking 1,984 infrastructure projects, underlying deals in India worth $1.9 trillion. 408 of those are renewable infrastructure opportunities. So that's, again, we see trend, in investments within infrastructure itself. And also we know that, from a regulator perspective, they are considering tapping into, Indians, NRIs, across the world by further encouraging the remittance corridor, right? This is awareness, of what is really required right now, and a step, which will help, with the capital flow as well as the recovery of the overall market in general. So that's on the, the economy. Now, from a India and post-COVID world perspective, we are certainly seeing, shoots of recovery in various sectors. For example, if you look at manufacturing, what we have seen is, the sector actually grew 0.6% after contracting negative 39% earlier in the year, last year. So that's, in my view, a good bounce back as well. If you look at, one of the other trends, especially when you look at digital payments within fintech, financial technology sector, India now has 10 neo, or call it the virtual banks, and we also foresee a lot of competition in this space, and a lot of investments coming in from foreign entities as well. So we've seen, in fact, there's a report from what we saw was September last year. It recorded that 209 billion mobile app-based payments were made. There's a massive initiative by the government, Digital India, which, in my view, is certainly helping accelerating, a lot of these digital payments and, going into a digital world going forward. Now, if you look at South Asia as a whole, so we talked about India a bit, but let me just touch on some of the other economies, within South Asia. Primarily Sri Lanka, Nepal, Bangladesh, Bhutan, and Maldives, which falls into that space. In Sri Lanka, we have seen some recovery underway from in Q3 perspective. What we have seen is the COVID itself. There has been resurgence in some of the cases and outbreaks in Sri Lanka, which has really hampered, I would say, the export and the tourist markets of the business. But again, we do see some recovery within the financial services space. Nepal has seen some substantial easing with respect to restrictions since September. But again, a lot of the demand is being held back because of the COVID-19 cases still on the rise. Economic activity in Bangladesh, if you look at that, it has recovered more strongly, than some of the other, as expected. But again, some of the outbreaks that we've seen with respect to COVID certainly has, some hesitation with respect to bounce back, especially within the export market as well. Bhutan, it's really being held back. The economic activity is because of, again, severe lockdowns, that we have seen both in August and September. And Maldives has been hit, even though there has been some travel in and out of Maldives. But it has seen a little weak demand because of major restrictions within the European market, which I believe is hampering the tourism business and recovery for Maldives. And thirdly, let's finally talk about what are we hearing from our customers and clients. So I'd just like to give you some of that as well. For South Asia. So many of our customers are actually, looking forward to capitalize on opportunities presented through digitization, any strategic areas, especially within the sustainable finance space. We have seen as, local asset managers, for example, more forthcoming in launching ESG-based investment strategies, and more ESG-based funds are being launched in India and in this region. Another thing that we have heard a lot from our customers and they're really excited about is the internationalization of rupee, and in fact even international funds and markets through GIFT, which is the Gujarat International Finance Tech a specialized economic zone city that we have here. So there's a lot of interest there. This will bring increased liquidity to our markets and access to funds like never before, in my view. And late last year we had a lot of the meetings with customers. Everyone's eyeing on GIFT and setting up and having a presence there already in Gujarat. And just yesterday, actually, we heard from one of our large tier 1 private bank who seemed to be extremely confident with the potential, and even a lot of I talked about neobanks, the fierce competition. They seem very bullish on that. In fact, there was a lot of bullishness about the market and the real boldness in the growth trajectory for the financial services sector. In conclusion, like I said, the recovery is well underway. Whilst there is a long way to go, the green shoots of life are being seen in economic trends, the COVID response, and also what we hear from our clients. So I personally am very optimistic about the growth in the region, and look forward to 2021. Thank you for that.
Thanks for the really in-depth, I guess, overview of what we can expect for South Asia in 2021, and great, I think, concept coming out around the rise of sustainable investing, digitalization, financial inclusion, and payments. So I'm sure we could have a separate episode for each of these topics, but I know we are short on time. So Gautam, I wanted to thank you for sharing your insights, and I think infrastructure will be one area that we'll kind of tackle in the rest of the episode. But thank you for being here with us today.
Thank you so much for having me. Take care.
Thanks. And like I said, we will spend the rest of the episode really talking about infrastructure and an asset class. And I'm really excited to introduce our speaker for this part of the episode, Michael Rautmann, Global Head of Emerging and Frontier Markets at Refinitiv.
Hi, Trang. Thanks for having me.
Thanks, Mike. And I know Gautam touched on infrastructure being such a big part of the recovery efforts in India and other parts of South Asia. But what are your thoughts on the key drivers behind infrastructure investing as an increasingly popular activity in the economy?
Sure. Look, I think it's reasonably clear that obviously infrastructure investing is critical for the development of any country. And growth and improvements of infrastructure implies improved environments, improved economies, and improved society. And really, historically, infrastructure investing has always been in the remit of governments or international development banks. And we've seen recently that this infrastructure investing concept is becoming more popular with institutional investors and even individual investors over recent years. This is because of the long-term nature of some of these projects and some of the longer-term returns that these projects are starting to yield. We see some infrastructure projects now lasting or spanning 30 years. And these returns are also regularly consistent that come from these projects, and they've been outperforming conventional investments in recent times. And the long-term nature of these projects generally means that they now find themselves in things like pension funds and general funds. And then this generally drives the concept of infrastructure as an asset class. We also do know that at the moment there is a global infrastructure funding gap, whether that's to meet the requirements of the Paris Agreement, or to meet generally the demands of digital infrastructure, as Gautam mentioned, or just general basic infrastructure needs in certain countries, or to address global initiatives, things such as Belt and Road Initiative or Blue Dot from America or JBIC in Japan. And finally, also, as Gautam touched on, COVID has obviously had a massive impact on the global infrastructure investment space. There are now lots of distressed assets or credit opportunities that have arisen from problems with project financing.
Thank you. And Gautam as well, I think, touched a bit on Infrastructure 360. But can you tell us more about what Refinitiv is doing in this space?
Sure. We've actually been doing a lot in this space for over 40 years now by tracking deals and loans information related to project finance. But what we've recently done, as Gautam mentioned with Infrastructure 360, is we've taken the decision to take a more holistic approach to how we cover infrastructure investment and project finance. And we really built a workflow around this space. The first thing we did is we've combined all our assets that we have in this space. We have a fantastic deals database and a loans database. We've been tracking projects in the Middle East, North Africa, of I think it's 21,000 projects covering that space. We also have fantastic data from our Belt and Road Initiative that we've been working on, as well as data as content and insights from Project Finance International, which is a leader in this space. We then combined that with news and insights from Reuters and Zawiya and other sources, and really looked at changing the way we look at infrastructure funding from just following the life cycle of a project or following the life cycle of the finance and joining that up together. So as a project evolves over time, you can track how the funding evolves over time. And we've plotted this on an interactive map. So you can really look at a project, look at the associated supply chain, the organizations involved through that interactive map. We've also created real-time league tables related to project finance deals and loans investing as well. So now what we really have is we have an end-to-end tool that covers projects, their life cycle, and also the life cycle and evolution of the finance, all the way to when it's refinanced or closed off for projects around the globe.
Thank you. And I think we'll share a link to the Infrastructure 360 page at the end of this episode if anyone wants to find out more. So Mike, you've touched on infrastructure as a tool to meet the Paris Agreement, and it's a topic that's very close to heart to me personally. But what are your thoughts on leveraging infrastructure as a critical part of sustainable recovery?
Look, I think it's one of the themes that I see for infrastructure evolving over time. The rise of renewables and green infrastructure continues. We see China as one of the fastest growing solar developers in the world now. And really, I think there's two elements to this which are very important. The first element is there's a lot of focus on projects that reduce their impact on the environment or that have are based on a renewable energy source. But there's also a second element to this which is related to the funding. Projects that are funded by a mechanism that provides environmental benefits, such as a green bond, for example. And I think that there are a lot of asset managers or investors around the globe who still have a mandate to invest in sustainability or in ESG, and I don't see that slowing down. So we're only going to see a continued growth in this space. And I think this year already we've seen 11 projects around the globe being announced related to sustainable infrastructure.
Thank you. And I guess the parting thought, is there anything that you would like to highlight when it comes to the future for infrastructure?
Sure. Look, I think this theme is, or this topic is not going away, right? Infrastructure investing is a big theme for years to come. Whether it's due to the impact of COVID, we see a lot of countries having plans now to spend themselves out of recession by investing in infrastructure. Very topical today with the presidential inauguration in America. I think the themes about investing in infrastructure in America have been a big part of this presidential process. And we also see the evolution of things like Belt and Road and other global initiatives that will continue. So the space will continue to see interest. I think maybe two topics that we will continue, or maybe that we'll see this year that would be interesting to note are, firstly, I think we'll see a lot of smaller projects or projects broken up into smaller parts. Firstly, to diversify the nature of the finance. So, generally, often projects are funded by a single source, like a government or an international development bank, and we see that changing now in order to reduce the risk. And we see governments wanting to either do PPP or work with funds, infrastructure funds, or even look to exchanges where are project bonds listed that would fund some of these projects. And that's also just breaking them up into smaller parts allows you to diversify, to reduce the delivery risk. And we also then see, and Gautam touched on this as well, about digitalization in Asia. I think investment in digital infrastructure will continue at pace this year, whether it's developing countries just building out their digital infrastructure, or whether it's developed countries looking to upgrade their infrastructure, and that's a dire need in some of these countries. And finally, also because of the continued focus on 5G.
Thank you. So diversification of funding and digital infrastructure, great two topics as well. Thank you so much, Mike, for being here with us. And again, like I mentioned, if anyone wants to find out more about our infrastructure-related data and solutions, we'll provide a QR code, I think, now on screen, and also a link in the chat for you to kind of find out more. And in terms of our next episode at 2 p.m., I look forward to seeing you back here to talk about a topic that I think keeps us all on our toes, the economic outlook for China. See you then.